Donald Trump has declared that this Wednesday, April 2nd, is Liberation Day for America. He's essentially set to enact a bunch of different tariffs on foreign goods, and he's had a pretty firm stance that America has been taken advantage of for too long. But what does that actually mean for the stock market? So, as I kind of just stated, his economic plan really revolves around what he's touting as protecting American industries from foreign competition. His plan includes a baseline tariff on all imports and higher, more targeted tariffs on other specific goods and specific countries as well. His supporters say that this will bring jobs back to the U.S., while his critics are warning that it would drive up costs for consumers and be just as inflationary as some of the policies of his predecessor. Whenever major tariffs are announced, the stock market tends to react very swiftly. Investors are afraid of trade wars, supply chain disruptions, and increased costs for businesses. Those aren't things that investors typically like. So that could create an initial sell-off, particularly in a few different sectors such as retail and consumer goods. Higher import prices are ultimately going to cause rising prices on the consumer. In technology, many technology components are made overseas, like chips and even the materials that are needed for them. Something to note about technology specifically is that it carries the greatest weight in the NASDAQ and the S&P 500, and it's the second greatest weight in the Dow. So an influx in costs here in hurting this business, specifically the business of technology, that will create the greatest material impact in the overall market. On the flip side of this, companies that rely on domestic production could see some upside. That includes steel and aluminum companies like Nucor, U.S. Steel. With tariffs on foreign materials, local producers are going to see an increase in business. In terms of American manufacturing, there's more incentives for U.S.-based production for companies like Caterpillar, your John Deere's, stuff like that. And also in energy, a potential shift in the dynamic toward domestic energy dependence is definitely going to cause an increase in business on that front for American energy companies as well. And, something that I'm watching personally is, because many of these companies in these certain sectors are a part of the Dow, YM is kind of my sleeper pick to outperform if there's a positive scenario in any of this. One major concern is also inflation. Tariffs often lead to higher consumer prices as companies pass increased costs on the customers, as I kind of just spoke about. So if inflation spikes, the Fed may actually be forced to keep interest rates as high as they are for a longer period of time, which could also put additional pressure on growth stocks and the broader market as well. Historically, tariffs have kind of had mixed effects on the market, but as far as this season of tariffs goes, the deciding factors of how things play out will largely be dependent on how trading partners retaliate, whether U.S. companies adapt their supply chains, and also how the Fed responds to inflation. So overall, Trump's Liberation Day could trigger immediate volatility, but it also presents opportunities for traders who anticipate the shifts. Whether this move strengthens the U.S. economy or leads to some turbulence, it's up to you as an intelligent investor to make good decisions. So what do you think? Will Trump's tariffs be a game changer for the market, or will they create more problems than they solve? Let me know in the comments, man, and make sure you subscribe and drop a like, and I'll catch y'all on the next video.